by mistake, I launched it. All right, everybody, we are live. Um, and this is our show. This okay. Let me show this where we are both equally. Okay. Um, yeah. So this is the we call it Bitcoin Live, and with the Power Law team. That right now is me and my son, and then the bring my microphone and the Minotaur team. And Marcus is representing the. Usually we have a few more people, but they were busy today. Um, but me and Marcus are going to do the show. We're going to talk about different things about the market, Bitcoin market. I'm going to show you some charts. I will start with my power law charts, and then Marcus, like always, will give us very good insights about the liquidity because uh, he has very amazing indicators to show what is going on with that. In fact, I'm curious myself to see what is happening right now after all these changes that we had recently. All right, so let's start looking at charts. Um, okay, so we will start with this one. All right, so of course everybody in the Bitcoin space, unless you were under a rock, has seen what happened in the last few days. We had finally a nice recovery. This is something that we anticipated, right? We actually kind of predicted. Now, is the prediction true in the sense, price can go up or down? So you are already have, it can also stay the same kind of, right? It can move sideways. But, we have mentioned this thing, and I will show you a chart in a second, where we have made this claim that there is this relationship between global liquidity and local liquidity, sorry, and local price, right? Bitcoin price with with a delay, and the delay is debated. What the delay is 90 days, is 100 days. It's probably there is no a precise delay. It's something that, like many things in this kind of field, it's a probability, right? It's statistics. So there is some kind of a delay, but it's not a fixed number. But it's on the order of about 3 months, something of that order. Now, the um, the idea is how do you explain this delay, right? With gold, for example, the delay is almost non-existent, and one of the possible interpretations is that um, liquidity shows movement of capital, and the capital goes from one asset to another, and in certain situation it moves to more risky assets, right? Unfortunately, I don't think Bitcoin is risky. It's actually probably one of the most reliable type of investment you can have right now, but a lot of people perceive it risky. Risky mostly because, even if a long-term trajectory is clear to most Bitcoiners, there is a lot of volatility. That is actually your friend, right? We are in the camp where we like Bitcoin volatility. It's our friend. You can use it. You can tame it. Some people are afraid of it, but actually we consider it good. So what this chart is trying to show is based on this understanding that we have about Bitcoin, that Bitcoin has two main modes. In fact, actually three. I should update the chart with transitions areas. But the main idea, it kind of corresponds. So, that we have this long-term trajectory, right? It is the blue line, the power law that has been valid, since the beginning of the history of Bitcoin. And you can see it's kind of a middle ground value for the price of Bitcoin. But it's trying to find a compromise between these large deviations that are the peaks, and these bottoms, right? And then one of the most solid component of this analysis is the what we call um, the support line, the power law support, where if you take 60% away in the negative direction, uh, you create this other parallel power law. You touch all the major bottoms, in particular, even during COVID, like for example here, uh, the price never violated this support line. And it's not a support line that is drawn by hand and arbitrary, right? Subjective. It's something calculated by math. And now the two different areas, you can calculate it using many different methods. We use what is called the Markov chain. It's basically a method that you only feed basically the data, and then the algo uh, looks at how things change over time. And you can say, well, splits the data in two components, in three components. And then it finds things that it thinks are similar in terms of how they change and identify these regions. And you can see by doing that, we can, in this case, I asked to find two regions. And you can see there are clearly two regions, one associated with the bubble. It doesn't know that these also correspond when the price is above a blue line. It doesn't use that information, but it's able to identify these two regions very clearly. So there is a region that we call the core power law, that is the green region, and then there is a region that is represents the time when we deviate from the power law. But notice we always go back, right? We have in this red region, we violate the power law. So when people say, "Oh, can the power law be violated?" Yes, it happened several times, every time we had a bubble. But the interesting thing is that when we went down, right, Bitcoin tested this idea of leaving the power law, he didn't like it, and he went back and kind of cancel out almost perfectly whatever deviations we had from the power law. That is really cool and interesting, right? And this happened over and over again. And usually, when we are in a region, we stay in the region. There have been few exceptions, like fake out, like this one. Usually, there is some kind of a external event that explains why that happened. We had the ETFs here, for example, where the price was pushed. But notice we just barely touch the power law, and then we correct it, right? And what happened around November, we were supposed to enter because it is something associated with the cycle, right? We were supposed to enter the red zone. We did enter. In fact, we did enter it exactly how I predicted. I predicted this will happen in November, and it was like clockwork, and the price went up. But from that moment on, because I had already a liquidity indicator, at that time I didn't really believe too much about this delay. I was still observing it. I was aware that people were mentioning delay between the global liquidity and the price, and but I was still pointing out how it looks weird that this move up of the price was not supported by global liquidity, because this is what we observed every single time in the past, and this time was different. And if we took it seriously, we could actually predict it, this correction. And there are many possible explanations. Maybe people were aware that Trump was coming. There was a very good chance that Trump will win the election. Many people took that as a bullish sign, but also there was a lot of worry about the tariffs, and so maybe that anticipated this move down. People started to take away some assets from Bitcoin because we were worried about tariffs and in general, right? Also because when we reach 100K, that was kind of a psychological um, barrier in a sense, right? And in fact, Marcus, do you see a lot of that idea that people create these liquidity barriers at round numbers, in particular numbers like things like 100K? Is it something in your
Yeah.
experience that you observe a lot?
Yeah, those
Yeah,
tend to be psychological focal points where it has a lot of psychological bearing on those round numbers,
yeah,
tens,
exactly.
hundreds. Yep.
exactly.
Exactly.
Yeah, and we had a correction. This is a different correction, because again, if you look at how patterns have been repeated in the past, we did have a couple of violations of this rule, right? That we go in the red area when we are supposed to be in the green. We have a couple examples. This lasted quite a bit, but it never happened where, beside one single case, where when we are in the red area, because there is a lot of momentum, it's much more difficult to break that pattern. It happened only one time here, 2 cycles ago, and it lasted very quickly. In fact, actually kind of bounced back very violently, and we continue to go up. We never had a situation like this where we spend several weeks, if not even months, in this green area when we are supposed to be in the red area. But right now, it seems that we are correcting. Now, are we going back in the red area? That is the big question. We don't know. It it looks like there is all this additional information from the liquidity, right? So let me show you. I will have to stop sharing this. I'm going to show you the other chart, relevant chart. Uh, this one. So this chart, in this chart, I created a model of the price. So I allow for this decay, and this delay um, between global liquidity and the price of Bitcoin. And I tried many values, and I settled on the one that gave me the best predictive power. So basically, I calculated how many times whenever the liquidity went up, also the price went up. I did that, right? I didn't. Some people use correlation, so I didn't find very useful to choose the best delay based on correlation. What seems much better, because I got a very nice curve. Was getting like a concave curve, so you could find like a maximum point. So what they did, I calculated, say, okay, uh, looking at all this data, if I make a model of a price based on global liquidity, which one gives me more predictive power? So basically, I calculated how many times we will get it right if we saw global liquidity going up and then um, price going up. And we got something close to 70%. So it's a little bit less, it's more like 60%. The predictive power between global liquidity and price when the price go down. So it does better in predicting the price going up, something close to 70%. When we see global liquidity going up, 70% of the time, price follows. With a delay that was chosen based on maximizing this predictive power, that was about 85 days. This is how I pick up 85 days. So right now I'm using a delay that is 85 days. And also we observed it is a better correlation if you only use the last 10 years. So it's not as deep as the beautiful power law that we see in Bitcoin, but there is a power law between price and global liquidity. It's a power law with a power 9.2. It means a very little change, like 10% change in global liquidity, give us two pair in price. It is amazing. And now, if you take at face value that not just the general trend, but also features, right? When we reach a bottom, when we reach a top, bottom seems to work better than tops. And here you can see, right? Oh, price went up, like liquidity went up, price went up. Like liquidity was stable, price was stable. Liquidity went up, price went up. Liquidity went down. So it's too much, like and we can calculate, like I say, 70% of the time, to say this is just finding Jesus on a tortilla, right? Our eyes can do that. We are good in picking up patterns that seem to be there, but they are not there. But it seems to be real, you know. So if this is real, then we see this explosion in liquidity, and that should correspond. And you see already, right? Let's zoom in so you can see it better, right? You can see the price kind of turned around more or less where the model say was going to turn, right? You see, look at here, right? The purple line. So what is the difference between the purple and the green? The green, I kind of smoothed a little bit the noise, and this is why there is a little of a delay there. You see how this knee here is a little bit shifted relatively to this. This is without smoothing. The purple, the green is with smoothing. Um, and if you take the purple, for example, you can see the turn around, it's almost perfectly matching when Bitcoin decided to turn around. You see, look at this. It's pretty amazing. So, you know, if you take it seriously, if you take it at face value, this means that we should have a run up that is going to last at least several months, right? And liquidity continues to go up. So we will see. Hopefully, it goes up all the way to the end of the year, maybe, you know, with some corrections or whatever, and that is a very good sign. So right now, I am on the side of taking this seriously. I want to believe, let's say, even if I usually I talk about feelings, etc. Right? But it's a feeling that is supported by also by the data and the math. You know, so it's okay. And this indicator below, it's about, you know, comparing structures. You know, it's calculating basically the winning rate over a certain, like in this case, 1 year window. It's a better way to comparing uh, how the two quantities work together, right? So, like here, when we say that liquidity was going up, the price was not moving, uh, the liquidity went down, price also went down. Because it's an average over 1 year, uh, we don't see yet the curving of this indicator. But anyway, so this is my contribution for today in terms of where we are, what is going on, and now we can go more in the details and see what Marcus has to say, because I'm actually myself very curious. He has beautiful charts. Um,
Yeah,
okay.
one other point, Giovanni, is I see that the money liquidity has turned up. That is very consistent with what's happening in the markets. The last after the sell-offs, we had the equities market and we had the bond market selling off at the same time. That's very, very rare if ever that happens. Typically, when you have higher risk assets like equities, the flight to quality or safety is to sell equities and move into bonds. But also with Trump's activity with the tariffs, that's affected the dollar. So we have the dollar losing value, the equities selling off, and the bonds selling off at the same time. But what's really intriguing is that capital rotated into Bitcoin, where typically Bitcoin is associated with a high risk asset. And now Bitcoin is being associated with a flight to safety. So now Bitcoin is performing like gold. And now the transition may be happening to where Bitcoin is now viewed as a safe asset to hedge against the dollar and all the dollar related assets like bonds. So matches your liquidity there.
Yeah, absolutely. So it's very interesting. And so now maybe we can look at
Yeah.
your liquidity charts,
Yep.
and
Yeah. Let me share. See what the actual real time money's doing.
yes,
Because money is money, and it's going to show up in a number of different ways. And money agrees with money. So, all right,
okay,
really quickly here, we're looking at a daily time frame on Bitcoin, uh, and we're looking at the Bitcoin futures market, perpetual futures. And the reason we are doing that is because in any major market, whether that's equities, bonds, or crypto, the futures market is the price discovery engine, because that is where the leverage is at. That is where the speculators are, and that is where the money flows first because of the leverage. And it's also used by the bigger institutions to hedge as well. So price discovery happens in the futures, and then the spot market or the asset markets follow the price discovery from the future. So that's why we use it to give us the fastest, most accurate data in the short term. So we're just looking at a standard Bitcoin chart. Anybody can get this on TradingView. Uh, but the secret or the magic is what causes the moves, right? What caused this move here, this explosive move up? What caused this explosive move down? There's a reason for that. There's liquidity there. You can't see it on your standard chart. There was a liquidity uh, grab here. So what happens is the market makers, there's no one Wizard of the Oz or one big firm that controls everything. There are a group of firms that can influence market direction because they have large orders flow, but it's the accumulation of all of the orders, all of the players that move markets. The market works kind of like an ocean where there are lots of different types of fish. There's plankton, which is like us. There's shrimp. There's small school fish that school, and there are bigger fish that feed on them: barracudas, groupers, sharks, and whales. So everybody's doing their own thing, but collectively it makes the ecosystem work. And that's why Giovanni's power law is so effective, because it uses physics, which is math is the architecture of the universe, really. So, okay, so let's move on. We've been in this uh, bearish trend here for about 2.5 months, and we've started to break above that. So now what we're going to get some, now we're going to turn on the x-ray and see what is causing this price action to do what it's doing. So now once we turn on the liquidity, we can see the action or why the price is magnetically attracted to liquidity. Big institutions or big order size needs liquidity to fulfill its orders. You're not going to put a $10 million or $1 million market order. You're going to break it down into thousands of smaller orders that get aggregated together. So there's like a chicken and an egg theory. Price chops to create liquidity, and then liquidity, once it gets accumulated, attracts price. So they're one and the same. Without price action, you don't generate liquidity, and without liquidity, you don't have price action, or you don't have an auction or a market. So here's what we're looking at now. We just recently had a nice up move because of the money situation where Bitcoin was a flight to quality right here. Money was flowing out of the bond market, out of the equities market, and the dollar at the same time. So Forex. And that money found its place here. However, we have been, for the longest time, we've been liquidating all of the long positions. So what you're looking at right now, this is a heat map that shows you the concentrated orders of all of the leverage players. This particular map shows 25x, 10x, 5x, and we can even show 3x. We're going to look at that in a minute. So we can see all those leverage positions, and they accumulate in this pool that we call these liquidity pools. So for about 2.5 months now, 3 months, we've been liquidating the long side. So if you think about it, what does an institution do, or what do the big institutions do, or the market collectively as a whole? These positions, once they are liquidated, these leveraged positions, they are forced to sell low. So they sell down here low, and then the market harvests all this inventory. It's like inventory. They harvest these positions, and then they move up here where you have all of these locked in shorts. These are all shorts up here. And then these shorts, when they get liquidated, they are forced to buy high. So as a cliche, you're always told to buy low and sell high, but the market forces mass amounts of players to actually sell low and buy high. So that's how that works. But locally, it looks like here's this is a very important insight. Now, the what typically happens is once the market makers and the algorithms take one side, they've looks like they've completed the harvest on the short, then they reverse. So this is our first major indication. Last week we didn't have this. Last week we were here and we were consolidating. We've broken out and now we have indicated or we have made an impulsive move, a decisive move into the long side for the first time in a long time. No pun intended. But we haven't touched this long side in quite a while, actually, since January. So this is very, very important, very, very insightful. So it looks like it appears that we are shifting our direction, and now we're starting to harvest the shorts. So this starts it off, and then we might get some type of pullback right here, and then we start the harvesting process on the other side. So it looks like we're on track with the power law. Everything's in confluence. This is a very, very exciting move right here because we haven't had that move in forever, where we're actually starting to harvest the longs. And we can use a previous liquidation range where we were in the summer of 2024. We did the same thing. This pattern repeats itself over and over and over again. It's nothing new. We harvested the short, the longs. And once this was August 2024, we changed directions. We made an impulsive move on the longs, and then we harvested. We didn't stop until we harvested all the longs. So it looks like to me that, in my opinion, we're doing that now. So we have left this phase right here, and we are here now. So when you add up all the time frame between the time that it took to do it last time to now, is we're on pace. So that 80-day cycle that Giovanni speaks of puts us harvesting this side in time. And this side, how big is it? This side, we're going to put in a 3x now. So right now, what's on the board, we're looking at about 136, 140. And when we get here, we'll form a new range and then be new liquidity formed at the top and the bottom of the new range. It starts the process over. If the bull market is going to continue past this leg here, but this leg looks like it's going to be locked in. High probability.
So, for example, I don't see strong red regions, right? The first one is at about 115 or something like that, right?
Yeah,
So that
I'll
means that
zoom in a little
very,
bit.
very likely we
There it
move
is.
all the way there, right?
Yeah, definitely. This is very attractive to the market right there. They're going for that. That's too much concentrated liquidity there. So they're
Yeah.
going. They're on their way. It's going to take some time. It's probably about
I'm
80,
actually
80 days.
I'm surprised that there is no much more resistance at 100 because you will think that there is some, but it's just yellow. It's not even red.
Yeah, there's a lot of bets being made below 100 and above 100. But yeah, that's a
Yeah.
concentrated area as well. Yep.
So do you think actually we are breaking through, or maybe there is a correction at 100?
Oh, we won't go straight up. We're gonna bounce around. Like
That's around.
every time liquidity is taken, you usually have a bounce in the opposite direction. So we just
Hmm.
took a big chunk of liquidity right here. So I would not be
Yeah.
surprised that we come back and then we can start moving to the next. And then it's ebbs and flows.
Yeah. Yeah.
Just look at how much local liquidity has been built since we made this high in January 20 right here. So
Yeah.
all that massive amount of new liquidity that's going to be taken. Definitely. Yep. Here's something else interesting. This is your power law level. Here, look how it correlates with. I'm going to put in a 3x.
Yeah.
It correlates with the liquidity that was left in the last cycle, which is perfect. Look at that.
Unbelievable.
Unbelievably
You're
precise.
talking about the support, right? The
Yeah.
support. Yeah.
Yeah. This
Yeah.
liquidity,
It's good.
this
That,
pool,
that support is real. It's a real
it
thing.
is real. They
Yeah.
didn't. That support is so strong. It wasn't liquidated last time in the last cycle.
Yeah. Yeah.
They left it. This is as low as they got right here. They took out all the 5x
Yeah.
and they left the 3 to right exactly on the power law.
Yeah,
Amazing.
it's really, there is no other asset that touch as such point of reference.
Yeah.
Just because of that, everybody should use the power law. But hey,
Yeah.
it's good.
Shit.
It's good for us.
Hey, hey, we
You
use it.
select, you selected
That's
people. Few
good.
selected
Yeah.
people.
We use it. It's our navigation system for our algorithms. Yeah, we
Yeah,
use it.
yeah.
Yeah.
Let everybody else,
Yeah.
smash against the mountains or the ground.
Exactly. Yes. So that kind of concludes that for today. But
Very good.
real nice event here. Big time.
So Costa, nice for you to join the show. Welcome.
Hey,
Yep.
Costa. All right.
Thank you. Thank you.
Uh,
Good to see you
do you want to
guys.
show some of the algo moves or
Yeah, I do actually. We've got a lot to share. So we've got I guess the uh, more conservative setup, which goes for larger swings. We can see. I think last time I checked in, I wasn't here last week. 18th, 12th would have been around the 12th. I think we probably would have made this move. Might have been sitting around here. So this is our conservative settings, and as you can see here, 11th of April, we've got a big take profit there. I think we hit around 6%, which is a great move there. This is using a trailing take profit as well, and it's
do,
really
do you
interesting to
mind,
see how
because I'm
this
not
looks
sure
here.
how many
So
people are following the show regularly. Can you give a very quick introduction about what we are looking at? What is this thing that we are discussing?
yeah, so so this is the Minotaur trading system. So we've developed an algorithm to basically trade Bitcoin's price action. The most unique thing about our system is it's not price predictive; it's price reactive. So it doesn't really matter where we're sitting at in terms of price. If the price of Bitcoin is 100,000 or 10,000, basically what we do is we enter an order at what our signals are perceived to be a good opportunity, as you can see right here. And then we do one or two things. If the market goes up and rallies, we take a profit, we close the trade. Happy days. If if the market goes against the initial decision, what we're able to do is cleverly place safety orders, which basically increases the volume of the trade while simultaneously reducing the average price, which allows us to actually get out at a lower entry. So you can see here's a good example. You can see we entered here at around 83, we exited here at around 81. Again, this is a pretty simple little trade here. We haven't gone too deep, so it hasn't had to come down too hard, but you can see the effectiveness of it there. And like Marcus said before, and why we're here with Giovanni is that we use the power law as our roadmap. Basically, our trading system is going to trade extremely efficiently within the power law bands, and we use the support level as our base reference for where we should begin starting to protect any kind of liquidation levels, because we are using a slight, tiny little bit of leverage, and we are trading futures and derivatives. So I guess that's the explanation, and yeah, just look at this move here. I think this is really interesting to look at. We entered a base order, a safety order. The market basically ranged for around 5, 6, 7, 8 days, and then the opportunity struck here. You can see the move here was around 4.5%. That's where our take profit was. And what we've done is with our trailing take profit function, we've allowed to basically get an extra five. Let's call it what would you call 5.9% on that
Very
trade.
nice. Yeah.
So between the two of them there, that's around a potentially 11.2% gain just in that move there. And you got to remember this is all fully automated as well. So the algorithm has got all the brains programmed in, all the risk management programmed in, and this is just a plug and play system that lets you run it. We can compare that to, and as you can see here, we're already entering the next trades here. But if we move on to the next screen and share this pad, this is more of our high frequency setup. So we can go again to the 12th at here. The difference between this one is it's covering just a small, bit more of a tighter coverage. So as you can see, it's taken a trade, exited a deal much quicker, entered it much quicker. So this one is kind of stepping through the price action as it's going up. It's sort of exiting, entering, exiting, entering. This is a really good strategy to just create a bit more frequency in the trading, create more of a regular income and profit taking. The two work really well together. So anyone who joins our program usually gets put on both of these settings. and we usually distribute the portfolio based on their risk appetite, where they'd like to allocate more. But together they work really, really well, because as you're waiting for one of them to exit, the other one might be rolling into the next deal. So yeah, really happy with the performance over the last few days. As you can see, we've pretty much maximized the opportunities, and like in particular this one, I don't think any kind of expert discretionary trader could have made a better
Yeah,
move than this
I
one
am
right
amazed
here.
how
The
it
entry here
got
is
that
fantastic.
deep there. Like when people say, "Oh, I want to buy the deep," this thing does it for you while you're sleeping. It's like,
Well, this is a good example of buying the dip here. We can look at the dip here and look at the
yeah,
times on
it's just
this.
crazy.
1:45 in the morning,
Yeah.
2:15 in the afternoon, 8:45
Yeah,
at night, 5:15, 4:45 in the morning, and then
Yeah. I would
7:30
have
in the
been.
morning,
I would have been.
and then
I
we
would have
took a
been dipping on my
profit.
pillow then.
Yeah, and you can see I guess another thing we like to talk about is the safety orders are also technicals. In other words, it's looking for the best opportunity. We do have sort of mathematical principles that we follow, but we've managed to code in our algorithm the algorithm to basically be able to choose between a mathematical price or a technical price. So the mathematical is almost like the stop loss. It's like we need to have this minimum, but if we can find a better entry, we're going to keep looking for it. So as you can see, when the market has a real big dip like this, it's going to find a better entry. And then if we come back here, if we can find a better exit on the take profit, and we've got this momentum, see this green line, that's part of our algorithm. It's quite aggressive there. So the algorithm knows that there's momentum in this trade. So we're going to hold on to it. This really packs a punch and makes this strategy incredibly powerful, because you can see it's alive. It's not just hitting presets; it's actually hitting presets or better, and that really gives it a brain. A lot of that is thanks to Marcus's help as well in helping us to put it into action. But it's
yeah,
working really well.
I love it. So yeah, and just again to explain, to the audience, the algo doesn't use your bitcoins. It doesn't sell the bitcoin. I mean, it can do that. In theory, you could use spot trading, but it's ideal when it's set up on futures. So you can use your bitcoin. Our suggestion is just use a little, because I know there is a lot of resistance, right, in the community about trading. I think it's a silly advice. I mean, the general advice is, yes, in general, the best thing is to hold your Bitcoin long term. We are all Bitcoin holders. We are not focused on necessarily making money. We want to. We believe in Bitcoin. In fact, we don't trade anything else. We are focused on Bitcoin. And the idea is that, because not all of us have hundreds and hundreds of Bitcoins, we would like more Bitcoins. We look at clever ways of increasing our Bitcoin holding. And this is one of them, right? That is automated. It works when you're working or sleeping. And the idea is, set up a little amount that you feel comfortable with, maybe 5, 10%, whatever it is. There are some risks associated. I think the biggest risk is because you're using futures, you're putting it on exchange. We are working eventually on DeFi solutions. We are not there yet. That will be safer, but it's still a small amount, and you're taking this risk. It is a calculated risk. Then you allow the bot, to do its job. And basically, the idea is that you're leveraging the two great quality of Bitcoin, which is because we are in the power law camp, we believe that Bitcoin will reach 1 million, it will reach 10 million. We know when that happens, more or less, right, within a certain level of certainty. At the same time, Bitcoin is still very volatile, and volatility is our friend, and we can use it, to do smart moves. And see, these smart moves don't need to predict the price of Bitcoin, even if we are using all these charts about liquidity, etc., that gives us a feeling of where possibly we go. but it doesn't need to, right? Because it reacts in the proper way to market conditions. And so, that is,
I think an important point, just to add a
yeah,
point there, Giovanni, for people to understand, is that this algorithm can walk the price down to zero. It doesn't actually matter if Bitcoin goes to 1 million or
right,
Bitcoin goes to zero. As long as the volatility exists, the algo will continue to operate. It's essentially price agnostic. The only difference is that there's actually no difference. Except for a disastrous crash that wiped 99% off in a single
right,
candle, the opposite of a gold, we call it the devil candle. Like only a devil candle is going to destroy something, in a flash. Like we really are price agnostic. It really doesn't matter where Bitcoin sits on
yeah.
the price chart. The algo is going to do its thing. And I'm just going to, Hugos here has asked a few
Yeah.
questions, and the
But
answer is
before
that
we answer question,
the
let me
price. Yeah, sorry, yeah.
counterpoint what you just said, right? That is a technical understanding, and that is correct. But because our audience, right, is open, because otherwise they will not listen to us. But the main idea is that we all of us are Bitcoiners. We believe in the long-term
Yes.
trend of Bitcoin. And so this is why we don't trade. We could apply this to other markets, but we don't, because in the end, the entire idea is that whatever gains we have is not something that we want to spend. Some people could use it as some kind of additional income, etc. But in my case, for example, and this is what is attractive to me,
You
I
buy more
immediately
Bitcoin.
converted into Bitcoin, because to me is a
Yeah.
Bitcoin. I'm not just doing DCA in a passive mode.
Well, this
Yeah,
is the smart thing to do. It's compounding and
exactly. I can
compounding.
put
Yeah.
more money in it, that I get from other sources, but I'm using my own Bitcoin to get more Bitcoin, and of course, that
Yeah.
nothing comes for free, because it will be misleading to tell people that there is some risk associated. Everything in life is risky, and this is a balance risk, right? It's something that you can calculate, and you can always decide how much of this risk, right? If you are not feel comfortable with 10%, you can say 5% or 2% or whatever. So this is what I really like about this system. I'm talking more like a user than somebody that is part of the team right now. But anyway, yeah, that is how I see it. But yeah, if you want to go ahead and take some of these questions, somebody's asking seriously, oh, what indicator Marcus is using it?
Uh,
Oh, yeah.
I post a link. I'm going to do it again, but tell
yeah.
us, Marcus,
I'd
please.
like to, thank the team at Trading Differently. They're very smart. They came up with an algorithm that extracts the data from the different crypto exchanges, and they're able to illustrate that data on an overlay of TradingView. And they do it. There are other providers that do that, Coin Market Cap and some of the other ones, but they do it such an accurate way and in a high illustration, and then they're able to show you the composition of the liquidity, not just a general pool. They break it down by 150x, 25x, 10, 5, and 3. So they are the best, and it is my go-to tool. It's like my favorite tool to use. I'm almost blind without it. So
Yeah, and I just put a link, scrolling down,
yeah,
and you can use that code. That is Marcus code. So please use that code. So you're also helping us also on the show in this way. But yeah, it's an amazing. I got it myself. Is one, but I really love Marcus' interpretation and reading of it. I learn a lot from it.
yep.
And there is this other question. Maybe Costi, you can ask. You can answer these.
Yeah, well, it's just good to show you. I guess the most recent event was the tariffs when the news came out. I just checked the date; it was
Do
around
you want to
April the
show the
2nd.
chart? Do
So we can just
you have it?
yeah, I'll show the
While
chart.
he's
Yeah,
while
yeah,
he's loading the
we can
chart,
see.
we'll just tell Hugo that we charge by the question. So he's gonna.
Yes.
Yeah, put all in. Yeah, so you can see it was here April the 2nd. The dip here, how big was that? The drop. Or if I go here, around 10% in around. It was around third, sixth, seventh, 4 or 5 days, 10%. So you can see it handled there. We had a little mini rally here. We took a profit. and then the market came down again and rallied back up. So yeah, if the market goes down, we're prepared to handle that. And you see here as well was a big one. This could have been a news moment too, around a 14%, 15% drop there. You see, it just absorbs that perfectly. Look at the entries there, and then we just take profit on the next rally when we can. And this is what's interesting, like I was saying before, is we're able to walk the price down. So, we started here at 90K, we took a profit here at 86K, and now our next entry here is 85K, and we're walking the price down here. We're taking a profit, and now we're at 83K, and we're taking a profit here at 82K. So that illustrates my point, is that we started at 96, now we're down to 82, and the bot is still generating returns exactly like it would be. Doesn't matter what price we are. So it's really important to understand that. That's the kind of algorithm you want to trade Bitcoin. We've looked at other strategies and things that are price predictive. I know Giovanni's even worked on developing some of these before, and they really fall apart. They can do incredibly well for a short period of time, but they're very trend focused. When the trend breaks and the indicators stop being able to detect that trend, the wheels just completely fall off. We found something that's completely price agnostic. In other words, once we enter a trade, we're basically waiting to see what's going to happen. If it goes up, we're going to take profit. If it goes down, we're going to protect the position until we're able to get out. We found that that's the safest and most profitable way to trade. And Giovanni can speak for any kind of trend seeking Bitcoin
of course,
strategy.
we have a power law that over the long term give us the direction where we are going, etc. But trying to predict short-term moves, it's basically impossible, and that is part of the things that people don't understand, right? That you have these two things, and they can be both true. You can have a general predictive power of a power law over the long term, and then you have randomness at the local level, right? I mean, it's not randomness; it's all due to certain things that happen and people action, but you cannot predict them ahead of time. It's very, very difficult. And it's weird because I did this in the past, right? And I tried, like I had an algorithm that was sorting stocks, for example, and it had a very good predictive power. I could predict with good confidence over a day which next stock will go up. And it worked for some time. It worked very nice for some time. And then market condition changed, and I got in a very bad situation. When COVID happened, that algorithm did the opposite. It was really bad, right? And I was because many people were using the algorithm, I had a subscription, etc. I felt so terrible because I want to help people with this algorithm. It's not about just making money, it's about helping people and feeling good that there are people that find this thing useful. But it's a difficult business. And I had even a slogan, and the slogan say, "Do not trade if you cannot predict." And that I really strongly believed on that. And I think that is amazing if you can predict. But now, after meeting Minotaurs, I take back that slogan because I think if you know how to react to the market, that is actually more reliable on the long term. Because it was a little bit of an hubris from my side. When I am wrong.
I remember reading that because I read all your stuff after Nashville. I remember reading that, and it actually crossed my mind. I was like, "Oh, and I wonder if on completely different pages."
No. I mean, I strongly believe that that is the real approach. If you could predict, that is amazing, right? That will be crazy. The problem is you can predict up to a certain point. There are times where you get that alpha, but it can go away very quickly. And there are things that are wonderful, like that stay over the long period of time, like the power law, because it's something. But can you trade with the power law? Up to a point, like you can tell large deviations, etc. Right? But if you want to use the volatility on a daily basis, like we do, or over the short term, then you're dealing with something that is unpredictable, and so then you look at how to react to it, right? And I think they got it. I was very surprised because, see, I can change my mind. You will not be a good scientist if you cannot change your mind. If you can update your positions in front of evidence, right? When you have the right evidence. And so I gave a chance, right? I get contacted, I can tell you, first of all, I get contacted by shit corners every single day. Hundreds of people that want me to support some project, whatever. Click, click, click. I delete, delete. I even thought, you know what? I'm going to get some money from some of these guys, and then tell the opposite. That nobody should buy this shit coin. So maybe they stop bothering me. But and I had got contacted by similar projects like Minotaur, and nobody convinced me. I play with some other algos, and I lost money over the long term, over a trial period. But the Minotaur project convinced me almost immediately. These guys know what to do. You can see with your own eyes, like you can see how well the algorithm is playing, and how it deals with drawdowns and everything. It's really impressive. And I you have to understand the limitations, of course, right? Nothing is perfect, but it works. So I'm very happy with it. That I'm very proud to be part of this team.
Yeah, and to add to that, if anyone's thinking of coming to Vegas for the conference, we're all going to be there. We met Giovanni in Nashville last year, and that was how we began working together. We'd heard, obviously I'd heard of the power law, and but the idea of incorporating the theories into our system hadn't presented itself yet until we started our dialogue. And a lot of us spend a lot of time online in these kind of chats and Discord groups, and there's nothing better than going to these events, and we're hosting an event ourselves. Come meet us, come shake our hands, come talk to Giovanni
Costa, do you
himself.
have a little flyer that tell us about the event? Can you share
Yeah,
it, please?
I'll bring it up, of course. Yeah.
Yeah, so we're having this event. I would love to meet independently from Minotaur. It will be a presentation about the power law in general, and so it will be a great opportunity to meet any power law supporters. So it's
You should be able to share it.
it's wonderful when we can actually all meet in person. My experience with this when I go to conferences, that people are really different when you meet them in person, and we are all part of the same team. So if you want to come and join us, and there'll be some food, right? Costa is giving us some nice appetizer.
Hopefully. Some appetizers, yeah.
While supplies last.
Maybe some
Costa,
pasta.
one day we do.
Maybe some
Costa,
pasta.
one day we do this event in Italy, because I'm planning
Yeah,
to buy a
I think that's
castle over there, and we do an event there. And then I will ask my brother chef. He's a chef, to
yeah,
come
we'll
and cook
do
a full Italian meal for everybody. We
fantastic.
give a
That's
yeah
what's
we
up.
give.
Yep. There we go.
But I
But
think
anyways,
like a lot of people as well have done, like, this. If you look at what we're doing, and even Giovanni, compared to a lot of other people, we put ourselves forward. We're willing to be out there. We're willing to meet people. This trading system, this is what we use ourselves. This is what Giovanni uses
right,
himself with his own money. We're very transparent. We work very closely with all our clients.
yeah,
And we do these streams, and I think now all the work we're doing, it's really going to start paying off. People seeing that, if you have something that works, you don't need to hide behind an NFT face and a little cartoon character, and you don't have to lurk around Discord rooms. If you have something that genuinely works, and you're willing to talk about it in public, you're willing to meet people in public, then maybe it's something that does work. And if you're interested in participating in that, book a call with our team. We take live calls. We offer free consultations to people. I think the link's down the bottom there if you want to speak to one of our team, and we'll give you a free consultation for 45 minutes. Have a chat with us. And if this is for you, that's fine. If it's a tool that you want to use, if it's not, that's fine too. But we're willing to to give you our time, to share with you our knowledge, to see if we can help you along as well. So take
yeah.
advantage of what we have to offer, because it might not last forever. That's another thing.
Yeah, and I want to reiterate this point. So I know that there are a lot of scams, and I have been, in the field for 12 years, 13 years now, and I have been scammed myself. I lost 35 bitcoins on an exchange. I went through every single thing. So what distinguishes us is exactly what Costa said. We are there. This is a system. Many people, I use the system, and I was showing my result, and people were begging me, say, "Oh, can you tell us? Can you share with us?" Say, "Let me test it. Let me test it. Let me test it." Because I didn't want to share it. I'm very protective of my community. I didn't want to share it until I felt there is something here, right? And I use it. So all of us are using it. If I understand well, Marcus is an ex-customer, right? Were you a customer at some point? Yeah, this is what
I
happened.
bought it too. Yeah.
Marcus was a customer. He joined the team eventually because he was impressed. There is no scam. It's just we are trying to do our best. We are creating something that we believe it's a product, and we are sharing it. If you like it and you test it, and it's useful to you, use it. Otherwise, don't. You don't have to. But it's not about really. Of course, it's a job for us. It's our profession. We're doing this full time. But it's about sharing things. Sharing knowledge, sharing our work, our passion. Is what it is. And this is why we want to have this meeting and meeting you in person. Because it's something that we do together. It's a community effort. This is the idea.
Absolutely.
Yes, absolutely.
Okay, guys, if you don't have any more questions, I think we want to keep it under 1 hour, or around 1 hour, and basically we reach our goal. Do you guys want to add anything else, or do you want to make any concluding remarks? Anything?
I want to add something that you made me laugh during the week when you came up with the mathematical equation for a Ponzi scheme. And then you compared that to the power law of Bitcoin. I thought that was really funny.
Yeah, because the Ponzi schemes are usually exponentials, and
Yeah.
they are not power law. Power law is
If
something that
if anyone wants to see, it's this one here. This is my favorite post of the week. Yeah, I thought that was a really good. I think if anyone wants a refutation for the Ponzi scheme argument, just send them this versus this. I think that's really cool.
Yeah, it's funny.
Yeah.
There is an equation for everything, right? This is what the mathematician thinks. Physicists think.
Yeah.
Anyway, guys,
Here we go. Amanda's. We've actually got a client who's just posted. Amanda, she says, "Do you want to open up that question?"
Yeah, Amanda.
There you go.
Is this you, Costa? Amanda.
It's my wife in the other room. Yes. But that's cool, man. That's really cool, Amanda. Thank you for posting that.
Yeah, thank you, Amanda.
Yeah, thanks.
We've actually had a lot of the Power Law. A lot of your supporters have been joining recently, which is amazing, Giovanni. So thank you for your support too.
Oh yeah, I one of my best friends, he actually started to play with the algorithm, and I think we had a little bit too strong parameters, but they were representative. But he started to make like 10. I think he did like 10%, 12% in a month, and he was telling me. He called me, say, "Oh, that is good, but can we try 20?" What are you talking? What are you talking about? Yeah. What are you talking about? He was not even joking, like, "Yeah, this is good. Let's push it to 20." And it's now doesn't work like that,
Yeah.
Like it's funny what people expectations are, right? So, what is a realistic cost for this type of algorithm? Just to give a.
All right, so people have to understand as well, the way that we've set up the algorithm is that we're also about giving people power and control, not a black box. So we've created the algorithm in a way that it's almost like a Swiss Army knife. So you're able to adjust most of the variables based on whatever you want. Now, having said that, it means technically you can achieve any results you want, but the problem is the wheels are going to fall off, right? If you're trying to get 20% a month, it might work for a few months. But if the market does something you don't expect, it's going to crash. So we've spent months and months and months running simulations of potential variables of these settings. And we've simulated at least the last 5 years. So we wanted to simulate from a consolidation period to a top of the cycle, through to a bear market, back to where we are now. We want to make sure that we have settings that survive under all those conditions. And we've been able to get two settings that work incredibly well in basically all the simulations that we've done. Those two settings will generate between 3 to 5% a month. Now, some months it could be a little bit more, some months it could be a little bit less, but the average was between 3 to 5%. Now, that's kind of like we're giving you like a BMW. Now, if you want to jump in the Ferrari, you jump into Marcus's trading desk. What you do with in Marcus's trading desk is he shows you how to unlock the full potential of the algorithm. He can generate returns upwards of 10 to 20% per month, but in a very, very, very not controlled the right word, overseen environment. So Marcus is watching everything. He's giving specific instructions. He's guiding everyone basically on a one-on-one. He's got his own Slack channel and group. So he's able to, put the turbocharger on the algorithm and crank it up. And he's able to do interesting things, like even create short versions of the bot. So it's running in the opposite direction. Maybe you can add to that a little bit, Marcus. But yeah, just generally for our average clients, we aim for 3 to 5% a month. That's our aim. We're happy with that.
Yeah,
No matter what. We think that's fantastic returns.
I
But
like I
obviously,
like
some
the
people want to do a bit
5%.
more.
I
Yeah.
like the 5% because it's amazing, right? I mean, you're almost to the level that you think it's a scam because the
Yeah,
5% a month, it's
Yeah.
crazy. But
yeah,
it's a realistic goal, But
yeah.
Well, it
yeah,
lines up. We always say we never want to say a number that's bigger than Jim Simons, because he did around 66%, and he's the kind of godfather of algorithmic trading. 5% a month gets you to around that 55, 60%. We're happy to say that we're not as good as the best of all time. We're not the
Oh,
GOAT, but he
oh,
wasn't trading Bitcoin, right?
yeah,
That's the thing that people have to
yeah,
understand, is
and
that
he was trading billions, right? And his
and
goal was
correct, and he was using insane amounts of leverage. So another thing that's really interesting is that this is a very, very low leverage trading system. We can even use our trading system trading spot, right? You don't even need leverage. You can also trade this system using uh, uh, with zero liquidation risk, right? So it's extremely flexible in how you want to run it. But again, to get that 3 to 5%, we do use a little bit of leverage. And yeah, to handball back to Marcus about sort of the returns that you're seeing in your trading desk.
yeah. Just real quick, it has a lot to do with expectations. I guess when we live in this connected world where 5% a month is insane amount of return. I mean, that is just insane. Where are you going to get that in traditional asset classes? It doesn't exist, and sometimes we lose sight of that. But that is just an insane amount. 60% a year is great, and then you have your Bitcoin doing a similar amount. You're double dipping. You wouldn't need
Yeah.
anything else but the patience to continue that. I stress in the trading desk that the market will give you a reasonable amount of money for a long time, or you can make a lot of money for a little while. It's your choice. These algorithms that we have developed, this flagship that we have, it is world class. It runs and it models just like an institutional grade algorithm. It is a WMD. It can be a weapon of mass destruction or your greatest ally, right? It is phenomenally powerful. So when you come to the trading desk, it's like Costa said, you buy a Ferrari, you can haul your groceries and go to the grocery store in it, or you can learn how to drive it on a racetrack. It's up to you. We do more advanced types of trading with it. However, it's still the algorithm is doing 80% of the work. We are the pilot. The algorithm is the plane. We just fly the plane. We don't make trading decisions. The algorithm does that. We oversee and we support the algorithm operations. So it it is just leverage what's already in front of you and let it work for you. That's all it takes.
very good. All right, guys. Let's do it again next week.
Yep.
Let's see where Bitcoin goes.
See what we
All
Awesome.
have
right.
next
All right,
week.
guys.
Thank you.
All right. Thank
Bye.
you. Bye bye.